All right. Well, let's see how this plays out. Right now, the spotlight continues to be on the IT space. That's where the big gains are this morning. And this is because Accenture's Q3 revenue came in ahead of estimates, with brokerages saying that this perhaps bodes well for Indian IT companies as well. So let's analyze this forward. We have Sandeep Sabharwal of Edelweiss Securities with us, also Apurva Prasad of HDFC Securities joining in. Thank you, gentlemen, for being with us. Apurva, let me actually start with you. What is your read-through of the fact that Accenture managed to show this healthy top line, and to what extent can we extrapolate it to think that there will be, a positive rub-off even on large-cap Indian IT?
So it's pretty much a net positive read across. So they've actually posted numbers at the upper end of their guidance, and they have moderately tweaked the midpoint of their annual guidance. But if you look at their commentary in terms of how they're looking at large deal activity, the overall deal bookings in the coming quarters, I think there is an indication that things are improving at the ground. The fact that there is high single-digit growth that they have done on their BFS in the US, that bodes well. I think that's a positive read across. Also, their operation seems to be very resilient. With pre to post-COVID, no differences in the rate at which they are going live or the product releases that they have. So I think it's quite a positive read across, and which is pretty much in line with what we've recently written on the sector, that there are demand trends which are continuing to improve. We are seeing some very good signs of that. There is going to be a lot of consolidation-related benefits that we're looking at over the next few quarters, and 2Q, 3Q is really the place where things will start looking up. So I think that's something which we firmly believe. We further have extended our sort of constructive outlook on this, and I think there is very strong empirical evidence for the same. If you look at the track record of the past 10 to 15 years, we have continued to gain share across cycles, so be it the latest digital era cycle or was it the post-GFC phase. Indian IT, including Wipro, has also gained share, versus global peers. So the point I'm trying to make is there is a lot of market share gains that continue to be, even in a bear case scenario, even if you really feel that growth tanks in a big way, you will look at Indian IT companies which will be outperforming. So it's really a combination of all of things coming together very well, including their digital playbook, which continues to improve, and they're right up there with the likes of Accenture. So yeah, I mean, just to sum it up, the read across is positive, and we continue to remain positive in our sector.
Okay, all right. So that's Apurva's take, and he is firmly in favor of this. Sandeep, do you concur? And what is your current stance on large cap Indian IT?
So see, we are extremely positive on the tech names, and just a couple of weeks back, we have given a very bold sector call. We have upgraded the whole sector in a significant way, both on multiples and percentage and target price and earnings. And we have very clear view, and we concur broadly. And Accenture results is a substantiation of our thesis. I believe if you see the numbers, the outsourcing book has grown very well in this quarter. Even on the revenue front, you see all the geographies broadly have done well except Europe, where there is some weakness, and that weakness is primarily led by the lockdowns. And if you see from segment perspective also, barring products, all our segment have also done well. So there was a lot of fear before the result that, the best estimate or top estimate for revenue was 10.87 billion on Bloomberg, and they have reported 11 billion. So it is a massive beat. Again, on the EPS, the top estimate was $1.85, and they were given 1.9. I think the beaten hands down all the fearful numbers which were there, and you have to remember that this was the worst quarter in terms of lockdown, because this is the result till 31st of May. So I think, all the fears which were building up in last 2-3 weeks because of very negative estimate growth for the industry of 8-9% decline, I think they should be put to rest with these numbers. I think that, I still believe that we will close the year in positive growth rate, and our market gains share story of every year gaining 1-1.5% outsourcing will continue, and large players will continue to, win even within that space. So I think, it is a very golden time of next 2-3 years for all the large cap names in Indian IT also. But we prefer HCL Tech, Infosys, TCS and Tech Mahindra in that order, I would say. And I think we are getting to a very, very strong and robust time. We obviously have some negative news which may keep on coming because of the US elections. But if you avoid that, then there is a big bull run because of digital transformation and cloud migration.
Right, right. Apurva, and this is to both of you, doesn't Accenture's revenue exposure to digital is some 70%? And while Indian IT is 35 to 40%. So, if that is the case, Apurva, isn't the read-through limited to that degree? I mean, should we really be getting so excited?
So if you look at Accenture, so you're right, it's about 70% in what they club as cloud security and digital, which I believe has also grown at high single digits. So if you X out that portion, what it tells you is that the legacy piece of it would still be declining, and that's something of a trend which has been playing out. What we're looking at in a scenario that in a situation that if things improve over the next couple of quarters, you can actually look at the pace at which digital starts growing, that may even end up accelerating. And that's getting more integrated with the work that enterprises are doing. So let's not forget, the relevance of IT companies. So it's not just about cost optimization. It's about playing on the revenue line of it, So there is a lot of sort of building of omni-channel networks and so on. There's a lot of work which is being done around that, which is, I think, creating newer opportunities. And the fact that you're not just selling into the CIOs and CTO suite, you're going beyond that. So the addressability has expanded in a big way, which is why the addressability for digital space continues to look pretty good. And the best proxy for that is look at what an SAP cloud is growing at, or look at how a Workday is growing, for example. Look at the ServiceNows of the world. So, I mean, that tells you that there continues to be very strong momentum in the digital piece of the business. So early adopters, people who are digital native businesses, I think they will tend to do well. Enterprises who are investing a lot more digitally, they will probably grow disproportionately versus enterprises that are not adopting digital. So the divide is probably only going to get bigger. And that's where the relevance of Indian IT lies.
So Apurva, do you, in your assessment, is there significant upside in most IT names from here? Indian IT names?
Yeah, so we are looking at it. Look, we have come off a 25-30% up move. So we had come out with a positive note in March. I believe those were the near bottom levels. We have gone up about 25-30%. It's not fair to extrapolate those kind of trajectory, but yeah, we are fairly positive right now. Valuations are at about median levels to historical average, but there is a lot of valuation aberration within the sector. So I think those aberrations will probably get corrected. And I think as you're looking at more stability, a lot of incremental sort of earnings translate into better valuation for some of those companies. As we see it, we see a lot of looking order within the larger.
Sandeep, Yeah, I think we're losing the line with you, Apurva. Just we'll try and fix that in just a bit. Meanwhile, Sandeep, you mentioned that Accenture results include the month of May also. So it's basically the lockdown month, and hence it's positive. But the fact is that it also includes the month of March, where the impact of lockdown was very, very minimal, right? So it kind of balances that out. So once again, some COVID impact, some no COVID impact at all, which is the month of March. So it kind of evens out, doesn't it? Shouldn't one look at it like that?
I think, that impact will be very minuscule. I will tell you why. Because, Europe started locking down from 10th of March, and that reflects in the numbers. If you see, US has not declined. Actually, Europe has declined 5%, and that has been captured because of the March early lockdown. US started locking down from 27th of March. So I think, now very minuscule impact of that. If at all, the whole of next current quarter goes into lockdown, then you will see. Otherwise, I think the things will be positive. Also, I would just like to add one more line that, Accenture's digital proportion cannot be compared apple to apple with Indian IT companies like TCS or Infosys. There is a bifurcation difference, and because of that, I would also like to add that, you see that Accenture going into single digit their digital practice, while Infosys, TCS continue to grow 30-35% in that practice. And I think that trend will continue because the proportions are still lower and they're growing very fast. So I think it is an immensely positive result and commentary if you see the whole read across. And I think from here also, we are expecting at least 40-50% upside in all the names over the next 2 years. I see a very, very good period ahead for the tech sector, honestly.
I just missed that. How much upside did you say, Sandeep, over the next 2 years?
So we are expecting, the upsides from anywhere between 20% to 55% depending on the different large cap names.
Okay, 20% to 55% upside in IT stocks over the next 2 years. That's the call coming in from Sandeep. Thank you very much, Apurva, for joining in as well. Thanks to both of you. Interesting times with the Accenture commentary. We will take a break on that note. On the